But what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction.
Now, most of you have probably heard of Jim Cramer from Mad Money and the Street. He's a legend in the investment space. But did you know that he was once a fund manager of a hedge fund? And how that relates to us as investors in Tattooed Chef and Beyond Meat. Now, if you're new to this channel, welcome. And if you're not, then welcome back. As always, I would truly appreciate an early thumbs up to have spread the video to more people out there. And if you haven't subscribed already and you want to keep getting more information regarding the Chef, Beyond Meat, the very good food company, Oatly, or other plant-based companies out there, make sure to subscribe and don't forget that bell button. Thank you, folks. I truly appreciate your help. Yesterday evening, my main man, Emmanuel, came out with a warning to us TTCF investors that there might be a new short selling report that's on its way, and that the short selling might have already started. If you haven't seen that video yet, make sure to see it. If this is the case, then what could you do and how should you arm yourself? And if you're an investor in Beyond Meat, this has to do with you as well, because this is an ongoing story with Beyond Meat investors to begin with. In this video that I'm going to show you, Jim Cramer discusses the dark secrets with hedge funds. Obviously, it's not the best quality in itself because it's over 15 years old. So bear with me, but I promise you folks, it's going to be worth it.
You know, a lot of times when I was short at my hedge fund and I was positioned short, meaning I needed it down, I would create a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right? And
it is a very quick way to make money and very satisfying.
Okay. Well,
by the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Now, obviously, this is a video that was created in 2006, and even if YouTube already existed by then, it wasn't as big as today, right? So Jim Cramer probably didn't realize that sooner or later this video would be leaked and would be spread like a wildfire. But basically, Jim Cramer is telling us something that we can all benefit from, right? He's telling about how hedge funds work when it comes to their darker sides. At times, these funds create a situation, they create facts that might not have anything to do with the reality of the company, just because it meets their ongoing need. Now, that's something to keep in mind.
Well, the hedge funds are positioned long short, okay, not just long like mutual funds. So it's really vital these next 6 days because of your payday. You've really got to control the market. You can't let it lift. When you get a research in motion, it's really important to use a lot of your firepower to knock that down because it's the fulcrum of the market today. So let's say I were short. What I would do is I would hit a lot of guys with RIM. Now, you can't foment. That's a violation of
Ferment?
Yeah, you can't foment. You can't create yourself an impression that a stock's down. But you do it anyway because the SEC doesn't understand it. So that's the only sense that I would say this is illegal. But a hedge fund that's not up a lot really has to do a lot now to save itself. So this is different from what I was talking about at the beginning where I would be buying the Qs and stuff.
Right.
This is actually just blatantly illegal. But when you have 6 days and your company may be in doubt because you're down, I think it's really important to foment, if I were one of these guys, foment an impression that research in motion isn't any good because research in motion is the key today.
So once again, Jim Cramer here in 2006 is giving us valuable lessons, right? Basically gems on how the stock market works and when hedge funds have a need to fulfill what they actually do. They will do everything they can to cut corners. They'll basically break the law or at the very least bend it in an effort to try to confuse the SEC.
So, you would hit this guy and that guy, and when you would see an offering, when you see a guy who's bidding, you'd wipe out that guy very quickly. And what I used to do was called, if I wanted to go higher, I would take and bid. And if I wanted to go lower, I'd hit an offer. And I could get a stock like RIM for maybe, that might cost me 15, 20 million, Annie, to knock RIM down. But it would be fabulous because it would beleaguer all the moron longs who are also keying on research and motion. So
we're seeing on today with
RIM, we're seeing that. That's, again, when your company's in a survival mode, it's really important to defeat research in motion and get the Pisanis of the world and the people talking about it as if there's something wrong with RIM. Then you would call the journal and you get the bozo reporter on research in motion, and you would feed that there's a Palm's got a killer it's going to give away. These are all the things you must do on a day like today. And if you're not doing it, maybe you shouldn't be in the game.
Okay.
So basically, as you can hear, if the people who works for this firm views this, as Jim Cramer phrases it, survival mode, well, that basically means that they'll do anything they have to be able to meet their goals. It's all about making money.
You just kind of create an image that there's going to be news next week, and that's going to frighten everybody.
Right.
Then they all go out and say large put buyer UBS. And then they call Pisani again. You have to use those guys and say, listen, I see a big buyer of puts, and I'm told that it's SAC. You would do that too. And these are all what's really going on under the market that you don't see.
Right, and nobody else talks about it.
Right, but what's important when you're in that hedge fund mode is to not do anything remotely truthful. Because the truth is so against your view that it's important to create a new truth, to develop a fiction. And the fiction is developed by almost anybody who's down like 2% to up 6% here. You can't take any chances. You can't have the market up any more than it is if you're up 6. Because starting Jan 2, you'll have all your money come out. So what would you do if you're in that situation and you feel like you're desperate, is that you would do these actions.
So you're talking about the mechanics of the market.
Well, the mechanics are much more important than the fundamentals.
Oh, okay, well, but in terms of the fundamentals, you've been writing about how you think.
Who cares about the fundamentals? Research in motion just blew out the quarter.
Right.
But look what people can do. I mean, that's a fabulous thing. The great thing about the market is it has nothing to do with the actual stocks.
Right.
So obviously these funds understand what motivates people, right? It's fear. So if you just can create enough fear, you're able to get people to start selling out, and these companies can just keep pumping and dumping, right? So whatever works. If you have to tell lies, that's just part of the game, right? So folks, I'm really interested to hear your opinion on this. Who knew about this before? Let me know down in the comments. If this is news to you, also let me know. I'm really interested to hear about this. Now we know that the TTCF has been shorted all the way back since its SPAC days when it was called FMCI, right? This is a company that normally has a short that's around 20 to 30%. Now, if Emmanuel is on point, we might be headed to that territory again. Now, this is what Emmanuel already mentioned in his video, the Kerrisdale Capital report, the short reports here. And if we take a look at basically what they talked about that already in November then, that they would expect collapsing sales growth, poor branding, customer concentration at Sam's Club as a negative factor, few products, few customers, yada, yada, yada. And they would state here, we think that the stock is worth less than half its current price. And retail sales of TTCF brand have already stalled, suggesting a weak brand that is already suffering from a consumer fatigue. So this is really interesting. And I mean, we are fortunate today that we have this to look back at, right? We can easily see their agenda, especially when we know how well the chef has been doing this year or so. When it comes to Beyond Meat, this is the exact same story, but only a longer one because it's existed longer. And I would say it has to do with a lot more money because, as we know, this is the industry leader. It's more known globally as a brand, right? But we also know that a lot more institutions are right now invested in them, about 50 to 55%, whilst in the chef it's only about 12% at this very moment. This means obviously that even more money at play when these shorts are ongoing. And at the moment, they are around the most shortest stock in the market. Now, even traditional analysts will obviously be affected by these either straight out fabrications or the whole mentality. That is something you should consider when you read analyst reports, whether there's an agenda to short the stock or not. They are human too. They get affected by all these noise that is created and fabricated around them. So in conclusion, we have to understand that this is all part of the game. People who would create any situation possible, obviously trying to keep within the boundaries of the law, but if they had to bend it, they will likely do so. Because remember, these companies are dealing with millions of dollars and in some cases billions. For a lot of people, money makes you blind, and even blind to what is legally and morally okay. And remember, these companies are led by humans, and this is a human nature for a lot of people out there. So why am I telling you this? Well, it's quite simple. I want you to use this newfound knowledge to feel more secure about your investment decisions. Whether it's in the chef or Beyond Meat, if you've done your due diligence on the company, that you really understand the company in itself, their product, their vision, their financials, their future potential, the CEO, then I would say you have nothing to worry about, no matter the short-term noise that surrounds you. And remember, people, but especially these kind of companies, when they short a stock, they have a clear-cut agenda of making money, right? But it's not only about that. It's about making your boss happy, right? It's about getting those bonuses and getting promotions, etc. That means that a lot of these people at times will cut corners, and even if they have to, bend the law if that helps them reach their goal. Knowledge is power, folks, and make sure you have this kind of knowledge, but even more knowledge about your company. If you have that, you're properly armed for any situation out there and can rest easy when it starts going. As I've talked about before, and if you haven't seen this video regarding Tattoo Chef and short sellers, make sure you see it. I think this is actually a blessing for us long-term investors, because the longer we can actually invest at these prices, the better it is for many of us. Eventually, believe you me, in my opinion, Tattoo Chef and Beyond Meat is going to take off. And when they do, you would want to have invested enough money to be part of what awaits you on the moon or further. Now, before we end this video, I am truly interested to hear your opinions about this whole subject, so let me know down in the comments, folks. Well, folks, that was it for today. I truly hope you got a lot of value from today's video, and if you did, make sure to smash that like button and help me out. And if you want to keep getting more information regarding the chef, Tattoo Chef, Beyond Meat, Oatly, to name a few, make sure to subscribe and don't forget that magic bell button. Thank you, folks. I truly appreciate your help. And as always, this was not financial advice. These were just my own thoughts and opinions. It's important to do your own due diligence and invest safe. Hope you have a magnificent Tuesday. Hope to see you soon, and peace out.